see that euro entity gets above this resistance here, and cat CHF to get below this support area. So, however, guys, are you ready? If you're ready, then I would say we just start. By the way, first I felt like Jeremy could actually, like just create a video, but I felt like it's better to do this live because we can talk about, this topic, fear, is a very complex topic. We are talking about our psychology, and the psychology is very, very deep. And I can only, that's what I say here, I can only like give you a little bit of this topic. When you look at the iceberg model of Freud, for example, then you see the unconsciousness, like at least 70% of our psychology. So I felt like we do this, it's better to do this live because we can talk about these topics free. We can, you can ask questions or can add something if you want to, because we are only scratching at the surface here. Yeah, only trading related, or I try to keep it trading related. Okay, but I'm gonna turn off the music for this presentation, and I hope there won't be anyone disturbing me now. No phone, no dogs barking, no door ringing, nothing like that. So, where's the presentation here? Okay, but first of all, before we start with it, the question: who of you guys is still scared to lose money? Who still, as soon as you open a trade or you execute a trade, do you feel emotions? Do you get emotional? Or who of you? Look, I say no barking dog, she's barking. Lucy. Gosh. yeah, that was Lucy, right? I said, who's scared? Lucy said, I'm scared. Okay, I'm always shaking when validating the trade. Anthony, you are also scared to lose the trading. Okay, so I know some of these, I already mentioned some of these points, right? So you might have heard this already, but I will tell you why I'm personally not scared to lose any money, why I don't feel any emotions, and will give you, some advice, some tips how you can actually get rid of it. Because this, to get rid of the fear is a development. It doesn't happen tomorrow. It will take some time until you actually lose it. That's all practice, and you gotta work on your mindset, and you gotta understand why it's actually senseless, to be scared to lose money. So let's see if it works. Yes. Okay. First of all, sad fun fact, I try to keep this as short as possible here because the average adult attention span is currently at 8 seconds. It was at 12 seconds. Now it's at 8 seconds, and that's less than the goldfish. So people cannot really watch long presentations or long videos. That's, by the way, why YouTube videos are usually not longer than 10 minutes, because people tend to skip. People tend to look for, short and quick information because there's so much supply on the internet. Not really money, it's just numbers. But when your account is down 50% by tips, it makes you question your choice, doubt your actions. Yes, Tuna, this is correct. But let's continue here. So, like I said, it's a very complex topic, guys. Psychology, or the fear that you have, can have a lot of reasons. We are just scratching at the surface here. So fear can have a lot of reasons, like bad experience in the past, yeah, or diseases. That's why I can only give you a little insight into this. Psychology generally is very, very complex. Our psychology is complex. So if you don't find any help here in this video, you might have to, get deeper in your psychology and ask yourself, why am I actually scared? Or are you just scared to lose money? Are you generally a person that experiences a lot of fear in life? So like I said, it's just a scratch at the surface, only trading related, or I try to keep it trading related here. It's a little bit impossible because all this, goes hand in hand somehow, and but you will see. Let's go. So first of all, before we get into trading, we need to know what is fear. And I have a quote here from Vicky saying, fear is an emotion induced by perceived danger or threat, which causes psychological changes and ultimately behavioral changes. So now we could get deeper into this, but that doesn't make sense because, like I said, it's a very, very, complex topic. But, just in short, in my words, fear is just made to prepare us, to either escape or fight in a dangerous situation. Because we get a higher level of adrenaline, and so we have more stamina or more power. It means we can either, fight the situation or we run away. We just keep it as simple like that. All right. So before we continue, I want to introduce you to Winchester. Who's Winchester? You see that little cute hamster, right? And this little cute hamster is not cute as he looks like, because Winchester is, I don't know whether you have experienced that or not in your life, but Winchester is sitting in the back part of your head and spinning the wheel of concerns every single day. Do you know the situation when you're in your bed and you want to sleep and you feel like, oh shit, I still gotta do this and that. Oh shit, I still got this and that problem. Oh damn, I've gotta do this and that, I gotta pay these bills and that bills, and I still gotta, I don't know, call my insurance or whatever. And it's always spinning the wheels of concerns and your problems, and this leads to 90% of your thoughts are already thought. Do you know this? It's like you think about a problem, you come up with one scenario, then you're done. And again, you think about the same problem, suddenly, suddenly you think about that problem again, and you have another scenario in your head over and over again. And this Winchester is always concerned, always on the alert, and prevents a carefree existence. And we need to learn to fight this Winchester somehow. Yeah, this is not just trading related, generally for your life. You need to, convince Winchester to stop spinning the wheel or ignore, all these thoughts. Just important for the presentation, the little Winchester. So the question is, when do we actually need fear? And my conclusion is we need fear in life-threatening situations. So in this case, for example, you see a guy from the Stone Age in a very life-threatening situation. So fear would actually make sense right now because he could die. Right now, if he has this higher level of adrenaline, he could either, try to run away. This situation looks like he's about to die, but he could either run away, or punch him in the face, or suck a punch, knock him out, or whatever. The point is that we get to the limit when we got this adrenaline, to the limit of our abilities, maximum stamina, maximum power. So in this situation, fear would actually make sense, right? But the question is, will you die when you lose money? And for me personally, I live in Germany. It depends on what kind of situation, you have to deal with and where you live. But for me personally in Germany, if I don't have any money, if I'm unemployed, suddenly I lose my job, I have nothing. I go to the government, say, hey guys, I lost my job, I don't have any money, and I get support. I get money by the government. They pay my rent, and I don't have to starve. So I won't die when I lose money. So the conclusion is the fear to lose the money is completely unsubstantiated. You understand? And this is what you have to get in your head. Money, all right. I know I want to make money. I'm here to make money, right? Losing money isn't great. I don't like to lose. But I know when I lose it, it's not a big deal. It's not a big problem for me. Because if I would burn my entire account and I take all my savings and I burn it, I go to the government and say, hey dude, I need some money because I have nothing left and I have no job. So because of that, I want to underline this and show you my personal priorities in my life. And we got health, we got freedom, we got life or lifetime, and the last point is actually money. And I can explain you why. Because if I'm not healthy, I can't be free. Let's say I got cancer and I stuck in the hospital and I'm not free to go wherever I want to go because I will probably die if I leave the bed, right? When I'm not free, I cannot spend my lifetime the way I would like to. So, another example, let's say you are in prison. What is, how can you have a great life if you're stuck in prison when you're not free, right? And the last point is actually money. Because if I have no time, no lifetime left, let's say I would die, what do I want to do? What am I supposed to do with money when I die? Or let's say I don't have any time because I stuck in the office 24/7, not 24/7, but 16 hours a day. I always stuck in the office. I'm only working. How can you spend your money? How can you use your money? Whether you want to have a Lamborghini or let's say you want to do something good, do charities, whatever you want to do with the money, you can't do it because you don't have any time. All right, so we got three assets. Usually we got three assets for free: health, freedom, lifetime. When we enter the world, money is just something, extra that you can make. And there's the next point: you can make money. So money won't make you happy. That's another point that I want to mention here. A lot of people think if you make a lot of money, then you're gonna be happy. That's completely bullshit. Money amplifies your character. That's something we've heard from people like Will Smith, or in this case Jordan Belfort. It allows you to repeat your habits easily. So, for example, if you're drug addicted, well, guess what happens when I give you $1 million? You will buy more and more drugs. And there's a very, very nice example by Jordan Belfort. I don't know whether you know him, Wolf of Wall Street. I bet you know him. But Jordan Belfort said, and you can watch this yourself on YouTube, there was an interviewer asking Jordan Belfort, hey buddy, why did you actually, take so many drugs? Why did you do so many, he was very, very drug addicted all his life. And his answer was pretty simple. He said, I thought if I would be successful and I would have a lot of money that I would be happy. And guess what? He had millions and he wasn't happy. So he was looking for happiness, with drugs. And this is proving that money does not make you happy. So why am I mentioning this? Because a lot of people want to trade and make quick money because they think they would get happy. But that's not, money will not make you happy. If you're sad right now, it calms down because you can pay your bills, you got more opportunities, blah, 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 But if you're not happy right now with your life, then you won't be happy as soon as you got the money. You've got to find something that makes you happy. You got to find your passion. You got to, do something that makes you happy. I just wanted to mention this because, this is not only trading related, but I want to mention this because lots of people think if I make a lot of money with trading, then I'm finally going to be happy in my life. But guess what? You won't. Why are so many celebrities out there, very famous actors or musicians, drug addicted? Because they are not, first of all, they got to live with a lot of pressure, life's instantly changed with the fame, and they are just not happy as they thought they would be, That's why I'm mentioning this. So the second point is, if you chase the money, then you won't make any money, okay? So that's why a lot of beginners try to force trades. They want to force trades because they just want to make money, right? But if you don't, let's say if you chase the money won't come to you. But if you do something good, if you're good at something, let's say you're good at trading, you're good at, acting, you're good at whatever, the money will just be a side effect of your success because you're only successful if you're good at something. So the first step is be good at something. Be good at trading and the money will come to you. When you deliver value to the society, you will get the appreciation in form of money because people will pay you for the solutions you offer. What you got to do is you got to offer solutions for problems. And if you do this, the money will come to you. If you're good at it, the money will come to you. If you become professional in your job, the money will be just a side effect of that what you actually do. All right? Don't try to force money. If you try to force money or you chase the money will not come to you. That's what a lot of beginners do in trading. They just want to make money. They see something, look, the market suddenly moves up, so now I'm going to buy. What they do is they buy the peak money, the market moves down, they lose the money. Just an example. I'm just mentioning this because before you actually can lose the fear of losing money, you have to have a healthy relationship to money, and you have to understand money. All right. Okay. So now one scenario, just in terms of priorities. Let's say you get kidnapped and you have to pay ransom money. Would you give, the kidnapper all your money or not? I would like to know. Would you? Let's say I'm gonna end your life if you don't give me all your money. Would you give him all the money or not? You got. I personally, I would. I would give him whatever I got. If I got a million bitcoins, I would give him whatever I got just to keep me alive, to show mercy. And this is proving he would mess with me first. Okay, he would mess with you first. But let's say he's got an AK, and he's pointing at your head and said, give me all your money or you're gonna die. You would give him all your money. And this is showing that, your time, your health, your freedom is worth way more than, money. You're giving him all your money, right? So you're actually exchanging your lifetime for the money. That's what you do, right? So why do you waste your lifetime with being worried about the money? Why do you waste your lifetime? You exchange your lifetime for worries about something that has less value. If you're sitting here every single day and you're in a trade, or you can't sleep because you're in a trade and you constantly think about, oh my gosh, I could lose this trade. Oh my gosh, I could lose the money. You waste every second you waste with being worried about, losing the money won't come back. It's gone. You waste your lifetime. And guess what? Your lifetime is limited. But the point is you can make back every single dollar you lose. If I give this guy all the millions or whatever you got, $10, whatever, you can make it back. But you cannot back a single second that already is gone. Your entity is flying. Oh shit, now we're in the middle of the presentation. Okay, wait. Now I'm in the flow, guys. UNZD, okay, it's at the entry. CHF, Euro CHF, entity CHF. Never mind, we're gonna wait for the retest, guys, and then we might get the chance here, okay? Because I want to finish this first. It's the 4-hour chart, so we can wait for the retest. So time equals money is bullshit, is what I want to say. A lot of people say this. Of course you can make time or use your time to make money, right? But we don't trade because of that, because we actually want to invest money to make money in order to have more time. So to say time equals money is bullshit, because in this case it should be 5 plus 5 is 10. 5 plus 5 is 10, but it's not, because time is worth more than money. Yeah, I just wanted to say, don't waste your lifetime, your holy asset that you got here, just because, with being worried about losing money, just for the mindset. Again, here, lifetime and money account, you see, the older you get, the less lifetime you have. But the older the older you get, the more money you can make, or the less money you can make. It doesn't matter, You can always make money back. You can always get more money on your account, but you cannot get more lifetime on your account. That's what I want to say, just for your mindset, We will talk about trading soon. I just wanted to. I just want to help you to understand that it's not worth, always to be afraid and to be worried to lose money. Just for your mindset. Okay, so the question is, what do you want to trade? Probably because you want to be independent, you want to be financially free. You can have a lot of reasons. You want to support your family with more money. You want to be, like I said, unemployed, whatever it is. The simple answer is because you want to have a better life. So ask yourself, do you have a better life when you're constantly scared to lose the money that you invest on the market? Probably not, because you're completely stressed out. You can't sleep, right? And that's not what trading. That's not why you actually trade. So what I actually want to say here is, trading is not for everyone. If you can't deal with the risk, then you might not be made for trading, or you just got to work on your mindset, right? So now we get to reasons for fear in trading. All right, reasons for fear in trading. We got fear of the unknown, fear of being wrong, fear of missing out, FOMO, and fear of losing profits. So we basically gonna talk about 3 points here. FOMO is something that I'm gonna explain a bit, but I think we need another presentation for that. But we're gonna start with fear of the unknown. So fear of the unknown is a natural behavior. Again, Winchester. You know, I'm personally, like I said, I'm living in Germany, and I think the most dangerous animal here is a tick. maybe some wolves, but there are just a few in Germany. I've never seen one. I've seen once in my life. Yeah, I've seen one, but they usually ignore human beings, you know? So, for example, if I remember a situation, it was dark outside, I was at my horse farm and there's a forest, you know, and I was walking outside, it was dark, like I said, and I heard a noise in the bush. And the Winchester in my head instantly said, oh my gosh, a life-threatening situation, you know? Oh my gosh, because we don't know what's going on there. I know there's no dangerous animal. I know there's nothing dangerous in the bush, but the Winchester is saying, dude, alert, dude, you could die. This could be a wolf, dinosaur, whatever, you know? The Winchester is instantly freaking out, you know, and tries to terrify me. But I know this might be, I don't know, a deer or, you know, something that is not dangerous. So we are just scared because we don't know, like, you know, fear of death, as we don't know what's gonna happen. You know, maybe it's like whatever you believe in, but let's say the souls up there have to sign a contract, you know, with God saying you are not allowed to have any contact to people on the earth because you could tell them how great it actually is, you know, and the next day everyone jumps down the skyscrapers because they want to experience the same thing, you know. It's the same thing like the fear of the first time. I remember me as a kid, first time standing in front of a roller coaster, and I was scared, I was terrified. Then I was, you know, took around and said, wow, it's amazing, it's incredible. So it's just fear of the unknown. This is the first main reason why people are scared to lose money at the market. So we don't know what's gonna happen, what could go wrong, what if, you know, blah, blah, blah. And at the end of the day, you see the chart and said, I should have, I could have, I would have. So why didn't you? Because you don't know what you are actually doing. So what is the solution? Learn your handicraft, do your homework, and finally learn how the market works. And I know it's pretty hard because it's hard to get proper or decent access to educational material, right? But for example, these are my points. This is how I trade. Learn technical analysis, learn fundamental analysis, learn intermarket correlation, COTs, trade execution, trade management, risk management, all this. And if you do your homework and you learn this, then you know, okay, what could happen in this and that scenario. All right? And if I know what could happen in this and that scenario, what happens if this, what happens if that, then I can calculate my risk. Yeah? And I know what I'm gonna do in this and that case. I know what I'm gonna do if this and that goes wrong. But if you don't know, you have no experience, you have no clue, of course you're scared to lose. Of course you are scared to trade because you have no idea what you're actually doing. This is the solution. Learn your handicraft. So for example, if you would tell me, Jeremy, build me a house, I would say, dude, I have no clue about structural engineering, calculations, architecture, and so on. I have no clue about anything. I can't do it. You know, I would be, you know, if I would put brick on brick, you know, I would always be scared that at some point, you know, the house would collapse. Same thing to trading. It's a simple solution. You just got to learn how it works. Example, if you apply for a job, let's say you want to be a doctor, you know, you apply for a job at the hospital. Do you think they would take you if you have no education? No, they would say, dude, go to university, go to college and learn before you apply for a job. That's the point. People jump into trading because they want to make quick cash. You know, they want to make quick cash. So this is the process of learning. So first of all, your unconscious incompetence means you don't know what you don't know. This is when you don't trade at all. You don't touch any live accounts here. You open a paper money account and you learn the tools. You learn everything about the markets. Then you're conscious incompetence. Means you know what you don't know. That's perfect, because then you know what you have to fix. You know how to fill the gaps. You know what you have to look for to become a better trader. The next one is the conscious competence. Means you know what you know. You're good at something. And the next step is to be, the absolute pro, because you're unconscious competence. You don't even know what you know, because you know so much and you do everything automatically. All right? Just the 4 steps again. Now, fear of being wrong. You have no strategy, you have no wrong focus, you have no clue about math, and you got too much and inconsistent risk. And by fear of being wrong, I want to start with a quote. Look at this. I hope you can hear. I hope you can hear it. I hope it's loud enough. Wait. But listen to what he's saying. This is Wolf of Wall Street here. Wait, I'm going to listen to it as well.
Number 1 rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is?
Fugazi. It's
Yeah, fugazi. It's a wazi, it's a woozy, it's a fairy dust. It doesn't.
Sorry, he's acting so well. Did you hear? Or was it too quiet? Was it loud enough? Did you hear what he said? He ran to the execution. Wait, hold on. Not yet, dude. Hold on. Not yet. Cat's going crazy. Was loud enough. Okay, was loud enough. So he's kind of, exactly saying what I wanted to say. No one knows, whether you Warren Buffett or whoever, no one knows whether a stock is gonna go up, down, circling sideways, blah blah blah, No one knows. And that's the point. I just wanted to mention this because what people tend to do as beginners, they try to find strategies that would give them the perfect hit ratio, but that doesn't work. Yeah, but we're gonna talk about this. Just to open this topic, I wanted to show you this scene. So no strategy, no plan. All right. So if you have no strategy, no plan, then you will trade all over the place or all over the chart. You will trade everything you see, everything you've seen on the internet. Oh, look, there's a double top. Look, there's an SHS. Look, there's a cup and handle, a rounding bottom, whatever. You've seen, look, the internet says this is a, trend changing pattern, so I'm gonna do it. So you're just trading what you see, but you have nothing you're really looking for. You need a trading plan and a strategy, because the plan tells you what to do. Yeah. In order to reduce the subjectivity, you have to have this trading plan. The trading plan tells you exactly what are you looking for, when you execute a trade, why you execute a trade, how much you risk, how you manage the trade, when you stay out, when it's the best time to go in, and so on. The trading plan tells you, I want to follow a trend. That's your trading plan. If there's a double top pattern, you don't trade it, because your trading plan is saying, I only follow trends. For example, this will calm you down. This will, make you more relaxed, because it's not up to you anymore. It's up to your plan. Your plan is telling you what to do, not to you to yourself, and not your greed or your fear, which is saying, let's say your greed. Oh, look, dude, there's a double top. You got to short it right now. Look, there's an upcoming breakout. No, your plan is saying, dude, you stay the hell out, because the plan is to follow the trend. So you're going to wait for this double top to be done, and then you look for an entry to, an opportunity to follow the primary trend. Oh, Corona. The primary trend. Yeah? This will reduce the stress, your subjectivity. You're trading all over the place because you know exactly what you're looking for, and you have step by step what you're gonna do. All right? So a plan can, for example, look like this. And remember the setup, because we will use the setup as a as an example for upcoming screenshots or charts or scenarios. So let's say, for example, this is a plan which is saying, hey, I'm only gonna follow the uptrend. I want to follow the trend. I want to trade the fifth wave. I wait for a breakout of a resistance in this case. Yeah, I buy the 61.8% retracement, take 50% profit, risk earned, blah blah, and so on. You know, of course, you've got to back test it and see, do I get good results with this plan? Back testing is not a nice job here in trading. It's something that I don't like doing, but it's necessary in order to trust your strategy, to trust your plan. Because if you back tested 10 or 20 years and the backtest says with exactly this setup you're gonna get a hit ratio of 70% and probably a profit of this and that percent, then you can trust your strategy, and then you will stay calm. You will know exactly what you're looking for. You will stay calm and relaxed. All right, so this is just an example. There can be thousands of different ways. For example, you add MAs, you add volume profile, whatever you're looking for, or whatever you want to lose, Ichimoku clouds, or what you can use, whatever you want to use. The point is, it has to work with a backtest, and you have to have the step-by-step plan that you trust, that is telling you exactly what you do. No greed saying, oh, close the position now. No fear saying, oh shit, let's adjust the stop loss level. No, the plan. Print it out, sign it like a contract, and stick to it. This is so freaking important in order to lose the fear of losing money. So now we're going to talk about the wrong focus, and we were talking about this a lot of times already, but I finally wanted to show you some calculation and some proof why it's, you know, why the hit ratio in this case doesn't really matter, you know. So what beginners do is, and what a lot of people do is, like I already mentioned, they're looking for a strategy that will give them the perfect hit ratio, at least 90%, you know. And the problem is, and I've mentioned this already a lot of times, it is the only aspect of trading you can control. You have no impact on the market's price action. You don't know whether the market, we've just seen, you don't know whether the market moves up, down, moves sideways, blah, blah, blah. You don't know. It's the only aspect you cannot control. So why shall we focus on that? Simply because we're scared to lose money and we don't want to be wrong, right? But the point is, we're not here to be right. We are here to make money. Being right doesn't matter, and you will see why. So first of all, what can we control? We can control the trade execution, when and why we execute trades. We can control our money management, how much we risk, how big the position is, you know, how much money we lose as soon as the market hits the stop loss level. We can control the risk management, where we place our stop loss, the trade management, when we take profits, how we manage the trade, do we take partials, full exits, blah, and so on. We can control, again, risk management. When would you rather stay out? For example, during non-farm payrolls, volatile events like interest rate decisions, monetary policy meetings, and so on. You know, that's all what you can control. The only aspect of trading you can control is what will the market do? You know, you have a trend line. You have a trend that you see, a primary trend. But guess what? There are things you cannot know. For example, let's say I often take this as an example, but you see a downtrend in oil, and suddenly a pipeline, you know, breaks in, I don't know, Iran or somewhere, you know, a country that exports a lot of oil. Suddenly the market has less access to oil, means the price will go up no matter how bearish the chart looks like, yeah? Or another example, if you would have been a farmer in 2018 in Germany, you would have suffered a huge loss of money. But why? Because yes, I'm a farmer. I know when to harvest, you know, all this, but I don't know how the weather is going to be. I don't know whether it's going to be a hot and dry summer. I don't know whether it's going to be a rainy and wet summer, you know. This is something that I don't know. So that's what you often see on the internet. Signal services or whatever, coaches, it doesn't matter. They promise you a hit ratio of 90%. So I'm telling you, a high hit ratio is very easy to achieve with a low risk reward. For example, I could execute a trade now, earn $1, close the trade. I have a positive hit ratio. I do this 10 times in a row, make $10. I made 10 winners, but the question is it worth? And that's why we do the math right now together. So, this is something that I've often seen on the internet. Very often. You see an example here, a trade with a 100 pip stop loss, a target 1 with a 20 pip stop loss, target 2 50 pips, and target 3 is 100 pips. So, the entire trade has a risk reward of 1. If I would hit all the targets here, I would not even earn my risk. You know why? Because we take partial profits. Well, I'm going to show you. The first target is a risk reward of 0.2 to 1. Means I can earn 20 cents for $1 risk, or $2 for $10 risk. And so you can scale it up, however you want. Let's do the math. And this is an example with full access. Let's say you always hit the target 1. All right? And you always make 20 cents profit for $1 risk. It means I need 5 winning trades to compensate 1 loss. And of course I have to have a good hit ratio in this case. Yeah? Because as you can see, I need 5 wins to compensate 1 loss. I got a pretty story how I got some fear from the market. I thought you wanted to say feed the keep and keep the blood flowing. No, that's not what I wanted to say. Wait, let me finish this, then we're going to take a quick break, all right? So, I make 20 cents times 5 winning trades is $1, yeah? When I reach the second target, I actually make 50 cents, all right? So, in this case, I need 2 winning trades to compensate 1 losing trade, yeah? Because 50 cents times 2 is $1. So, let's do an example of partial profits, and that's the reality, usually. When you have multiple targets, you do it like this. You hit the first target, you take partial profits, move your stop loss to break even. First of all, it is very, very likely that you're going to get stopped out with this tight target at break even as soon as you've hit the first target. And it's also very likely that you're going to hit your first target because it's very close to your entry. But let's say I hit the first target and I take 50% profit. Means I take 10 cents instead of 20 cents profit. And if I have the case that the market reverses, that's very, very likely, and I get stopped out at break even, I took 50% profit. Then I get 10 cents for $1 risk, and I need 10 winning trades to compensate 1 loss. So let's say I have 9 out of 10 winning trades. I have this 90% hit ratio, all right? I make 9 trades with 10 cent profit, which is 90 cents profit, and I make 1 trade with $1 loss. I have a hit ratio of 90% and I've made a loss of 10 cents. Just an example of how hit ratio alone doesn't matter at all. And this is a scenario, or this is an example how professional traders do it. Professional traders, they have a hit ratio of 30%, 40%, 25%. What they do is they focus on setups that have a very high risk reward, because they don't focus on, will the market move up or move down? They focus on how much do I risk, how much reward do I get for my risk, all right? And much more. But instead of looking at the hit ratio, they look for great opportunities with a high reward, all right? So in this case, we have a stop loss of 30 pips and a take profit of 150 pips, yeah? So let's do the math again, full exits. We take profit, or the take profit would give us $5 profit for $1 risk. So I need 5 winning trades, or when I calculate 5 winning trades divided by 1 losing trade, it's 5. In this case, if we look at the reciprocal, yeah, then we need 0.2 winning trades to compensate 1 losing trade, or 1 winning trade compensates 5 losing trades. And this is the way better approach, because I don't have to focus on something that I cannot control in this case. I don't have to, worry about, will the market move up, will it move down? If I lose the trade, all right, then I've lost the trade. But I know I can lose 5 trades, and compensate it with 1 winning trade. And that's the difference. We don't focus on hit ratio, we focus on good risk reward. So if you win 2 out of 10 trades here, yeah, you have a hit ratio of 20%. You wouldn't make $2 profit, or 2% in this case, because you make 2 trades with $5 profit, which is $10, and 8 trades with $1 loss, which is $8. $10 minus $8 is $2 profit. You got it? So here's an example from last week. Our trades that we did, the signals that I've posted, it was a very rough week. What we can see, a great example here. We've made 13 trades. We had 5 wins, 5 losses, and 3 break even. So let's focus on that. We had a hit ratio of 50%, but we actually made a profit of 7%, which is pretty decent. Yeah. And now look why. Here you can see the profit in percentage. We've made minus 1% per trade. Yeah, here, minus 1%. In this case, we made an early exit with minus 0.67%. But all the trades, yeah, had an average profit of about 2%, of more than 2%. So we see 2.6, 1.5 in this case, that was an early exit. 3.45, 2%, 2.15. You understand? This, we had a hit ratio. So we lost 5 trades, yeah? 5 trades, and we've won 5 trades. Were you concerned about these 5 losing trades? Whenever we lost, did you cry because you were losing money? No reason, because at the end of the day, we had 7% profit. And 7% profit is almost the FTMO challenge you get 30 days for. We made this within 5 days. Even though we had a neutral hit ratio. We could have thrown a coin, had a toast and go short or long in this case. Risk reward or hit ratio alone doesn't matter. It's a mix of hit ratio, risk reward, consistent and low risk, and the trade management. And of course, the higher your risk reward, the lower your hit ratio can be, as proven with the previous calculation. And the tighter your in trading. Yeah. And the reasons for too much risk is, first of all, wrong expectations, because you're smelling quick money due to promises of the industry. Yeah, when you look on the internet, trading has never been so easy. Blah blah blah. You can make quick money, just buy or sell and blah. And they promise you bullshit. Okay. The next reason is you have a small account by financial pressure, and this is one of the worst cases. So if you have to pay bills and you're frustrated, you're depressed because you've got to pay bills, or someone in your family is sick and you want to help out, or you need to help out because you're scared, then this will be a huge problem for you because you want to make quick money. But the fact is, this is a business, and trading is not a rush. Trading is a marathon. All right. So small account is often a problem. That's why I really like the opportunity, for example, to get funded by, for example, FTMO. Too much confidence after a series of wins has been a problem for me as well. You make like four or five wins in a row, and you tend to overtrade because you think, oh gosh, this is so easy. This is how I burned a lot of money at the beginning of my trading career. A lot of money. And the desire to make back losses after a series of losing trades. You get frustrated, you get depressed because you were losing a lot. You were already risking way too much. You see your account is almost burned, and you feel like, dude, let's go all in or whatever. You just want to make it back. You just have the desire to make back the money you've already lost. So first, start with the wrong expectations. Advertisement promising you how easy it is to make money. Every one of us can see this everywhere. You just gotta, watch a YouTube video and you get the next advertisement of a coach saying, hey dude, just purchase my coaching and you're gonna be profitable easily, blah, 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 or you're gonna see some indicators, some strategies telling you how easy it is to make money with it. You just gotta buy it there. Different bots, EAs they offer. There's so many opportunities to make this quick money on the market, and that's why you think it is so easy, and you think you're one of those who are just, unlucky, or those who are the only ones who actually make no profit at the market. But that's not the truth. We're going to talk about the truth. The second point is the simple access to the market. Yeah, seems to make trading very easy because back in the days, trading was not meant to be for everyone. Trading was just, for those who were part of the high society. That you just open an account, you just gotta, Google broker. You get a huge list of brokers, or a lot of opportunities actually to open an account, to fund the account and to press sell or buy within seconds. It just takes 1 or 2 days until you got the account, right? Has never been so easy. Yeah, makes trading easy, right? It isn't. You see a lot of profit posts by traders who don't show any losses, and that's what a lot of people do on Telegram and on Facebook, on Instagram. You always see the MT4 open positions, and you see, wow, they have tons of money. First of all, you don't know whether this is a real account or not. Second thing is they often have way too high risk, and so a lot of profit. Second thing is you never see the risk reward. You don't even know whether the trade is just 2 pips away from entry. Okay, you can actually see it when you look at the price, right? But that's not what you look at. You're just looking at the blue figures you see in MT4. But the point is they don't show any losses, and I promise you, most of these who show these wins, they do this because they're excited about the wins. If you would be profitable, you wouldn't show it because it's just normal for you. It's just a business. You're not hyped. You're not like completely emotional because you make winning trades. It should be normal for you. If you make winners, you feel like, oh great, see, that's why I'm actually doing this. Why should I brag on the internet and show my wins? No, they just don't show losses. They may have a winning streak, the first winning streak since 2 years, and then they post it, and of course you feel like shit because you're losing and you're looking for someone who can help you, right? Don't get blinded by this shit. It's all fugazi. The mainstream media creating FOMO during hypes. For example, Bitcoin. I think I don't have to explain this. By the way, if the mainstream media says Bitcoin is freaking out, it's already too late, so don't jump in. For example, Bitcoin or other stocks, if there's the mainstream media talking about it, stay out, wait for the next opportunity. And retail strategies everywhere on the internet. Here, crossing MAs, Bollinger Bands, blah, blah, all this stuff that you find on the internet. Makes it so easy because all you got to do is open TradingView, add these two indicators, and then you trade how they tell you to do, That's not how it works. So the reality is 90% of all traders lose 90% of their capital within 90 days. And that's a proven statistic, And why is that? Simply because they're not educated. They just jump into that business because they smell the quick money. They have the wrong expectations. So trading is a business, right? Like I already said. And I often take this example in my live streams. But you have to know that you have returns, you have expenses, and sometimes you have a bad deal. Yeah, you have losing trades, you have cost, you have swap, you got spread, you got commission you got to pay. But at the end of the year, when you pay your taxes, you just want to compare your losses with your profits, right? And you just want to have more profit than loss. It means, or that already suggests, that losses are just a normal part of the business. And we can take this example. As always, you have a grocery store, you identify Pepsi as the current trend instead of Coca-Cola, and you buy it for a low price in order to sell it for a higher price. That's the same thing you do with stocks, forex, whatever. You buy something for a low price because you want to sell it for a higher price, or the other way around, you sell it for a higher price in order to buy it back for a lower price. And the price difference is your profit when you short something, right? So let's say you have this Pepsi, right? And there's no demand. No one is buying the Pepsi because you were wrong. Pepsi is not the trend. Coca-Cola is the trend. And what you do is you don't cry and hope, that you get rid of the Pepsi, or you don't, jump out of your store and yell at the people, buy my freaking Pepsi, You don't do this. Instead, you're offering a 50% discount to cut your loss. Yeah? You want to attract buyers and cut the loss because you're giving discount, so you're trying to push demand. And the next point when you make a complete loss is when the product is expired and you can't sell it anymore. Then you just gotta throw it away. That's just one example of a losing trade. This is a trade. You buy Pepsi for a low price, want to sell it for a higher price. You can't sell it because there's no demand, so you have a loss. Same thing to trading. When you trade the equity markets, when you trade the forex market, when you trade the crypto market, it doesn't matter. Okay? Get this in your head. It's a business. Losses are part of the game. Or don't call them losses, call them expenses, whatever. If that helps you out to say, oh no, it's not a loss, it's more like costs, then say it that way. Okay, next thing is the inconsistent risk. And I get so many messages often, Jeremy, why am I not making any profit? I even have a positive hit ratio. I have a 50% hit ratio. I'm not making any profit. Then I say, okay, what is your risk reward? What is your risk? Do you stick to the same risk over and over again? And most of the time I get the answer no. Or yes, I use the same lot size. And I already posted something about that, the same lot size, and how pips don't matter. Pips don't freaking matter. They don't say anything. The same lot size doesn't work as long as you don't trade the same with the same capital, the same pair with the same stop loss or the same risk reward. All right, so inconsistent risk is still the main reason why beginners lose money. All right, they still believe in the myth of use the same lot size, like I just said, and inconsistent risk actually increases the gamble level. And then we get back to the point hit ratio. But you will see what I mean. The point is, and that's important to note, you don't know whether you're gonna win or lose a trade. So here is a calculation, comparison and examples. So the first one here is scenario 1. Here you got profit based on luck. Yeah, and we take the same scenario like our trading plan. We have a risk reward of 2 to 1, means we can make $2 for $1 loss. We can win twice as much as we can lose, and we have a hit ratio of 50%. So in this case, yeah, you make profit based on luck because your first win, yeah, or with your first trade, you risk 3% and you make 6% profit. Then you lose a trade with less risk means you are losing less money, only 2% in this case. Yeah. With the next trade, you risk again 3%, and you make 6% profit. And then you say, oh, I made so much profit. Now I'm gonna keep the risk a bit lower. So you keep it at 1% and you only lose 1%. At the end of the day, you made 12% profit and a 3% loss, and you have 9% profit based on luck. The point is you could have lost the first trade with 3% and the third trade with 3%. You don't know whether you're gonna win this trade or this trade or this trade. This is why you increase your gamble level, let's say it that way. Scenario 2 shows what I mean. And this is why most of the beginners are so inconsistent with their profits. Oh, no, wait, what have I done? Sorry. Where is it? There, okay. I didn't want to click, sorry. Here, profit based on unluck. Again, risk reward 2 to 1. Here ratio is 50%. Again, we got 4 trades. Well, the first one, you start trading saying, I'm gonna keep it, slow now. I only risk 1%. You make 2%. Then you're completely hyped and you feel like, look, I got it, man. I'm the champ of the market. So I'm gonna risk 4%. Suddenly you lose 4% because it's a losing trade. The next one, then you feel like, oh no, okay, I gotta be very, very carefully now. I feel like, I'm not as confident as I was. So I only risk 2%. And now you win. You make 4% profit. And then you feel like, see, I got it. You risk 6% and you make a 6% loss. So in this case, based on unluck, you have a loss of 4% because you made 6% profit and a 10% loss. And the last scenario, and this is how you've got to do it, always stick to the same risk, because if you have this positive risk reward and you have this hit ratio of 50% and you back tested it, nothing can happen to you. If you win the first one with 1%, you make 2%. If you lose the second one with 1%, you lose 1%. And so on. At the end of the day, you got 4 trades, you got 4% profit minus 2% loss, and a profit of 2%. Of course, the profit is not that much, but you focus on consistency here. You want to do this every single day, a little bit of profit every single day, or week or month. If you stay consistent with your risk, then you're gonna make consistent profits. You got that? It's so important. This is really one of the one of the reasons why a lot of beginners don't even understand why they don't make money, no matter how good they trade. Because they just risk how they feel like. I feel good, now I risk much. I feel bad, now I risk a little bit less. Now I feel really bad, I want to make back the money, now I'm gonna go all in or risk 50%, whatever. So, why is too much risk a problem? Not just because of the calculation I've just shown you, but also because of the fact that high risk can drive you crazy. Yeah. Too much risk causes emotional trading, as you either get hyped by profits or depressed by losses. Like I said, you have a lot of profit, now you overtrade, or you're depressed, you want to make it back, now you come up with more risk. You tend to force trades in case of loss, as you want to make back the money. You tend to overtrade as you made a lot of money and want to get rich quick. In case of a win, and that's the problem, in case of a win, you get rewarded for bad decisions. And I've experienced that myself. I thought I'm the king of the markets when I started with binary options. So when for example, let's say I risk 20%, and I make a winning trade, and I've made a lot of money. I feel like, man, I just do this every day, once, over and over again, and I'm gonna be rich tomorrow or within a week. The problem is you get rewarded for bad behavior. Your brain learns, look, much risk is good. And that's the point, until you burn your account. This works until you burn your account. In case of a loss, you blame everyone else, but you're not yourself, because you are emotional. You feel like, what am I doing wrong? What's happening suddenly? My account is almost burned. The market, my broker, the spread, whatever. You try to blame everyone else in this case. You can't stay rational because you experience a roller coaster of emotions. You don't stick to your plan. And we're gonna get through some examples. You won't stick to your plan because of these freaking emotions. And only because of high risk. It's just because you look at the figures, you see, oh look, almost account done, or oh look, almost doubled my account. You know? Why shall we not trade with more than one, or we could also say 2% risk if you have a higher risk aversion, okay? The more risk, the harder is it to make back the loss. You stay calm and patient with winning trades, yeah, and you make a quick process with losing trades, means you don't mind to early exit as you can accept the loss, all right? Here's an example. If you take 1% risk per trade, yeah, and you have a capital of $1,000, then you have $999 left after one losing trade. After 10 losing trades, you only have 9.56% of a loss. And guess what? 10 losses in a row is more than normal in this business. The average losing streak of professional traders is at 23 trades. Now imagine you would lose 23 trades in a row and you risk 10%. You're done. You're completely done. Or 5%, you're done. Or 3%, you're almost done. Your account is just gone. If I keep it at 1%, I can still make it back. All right? So you can clearly see the more I risk, do you see how it's getting worse and worse the more I risk? Here, at 5%, I lose 40% after 10 trades. After 30%, I almost lose 100%. Or with 30% risk, I almost lose 100%. It's so important to understand this. Here, on the right side, you see how much you have to make back in order to be break even. If you lose 10%, you only got but the difference to 10% loss and to the amount you have to make back in order to be break even is not that much. It's only 1.11%, the difference here. Well, you can see when you lose 60%, you have to make back 150%. And if you lose 70%, you have to make back 233%. Just to show you how worse and worse it can get the more and more you risk. All right? So, now we talk about some scenarios here that you might know as a beginner. I know them. I experienced the same thing at the beginning of my trading career. You take profits way too early based on fear because you're scared to lose the profits. And now we come to the point, fear of losing profits. And you don't accept losses and adjust your stop loss based on hope. Means in both cases, you don't stick to your plan because you got way too much risk. So here's an example. You have an account of $1,000 and you risk 20%, which is $200. In this case, again, remember the setup we've traded. We are looking for higher highs and higher lows, which is by the way, the Dow theory. You need to learn more about the Dow theory. If you want to buy a Fibonacci retracement, you need to learn the Fibonacci theory. And if you want to trade waves, you need to learn more about the Elliott wave theory. But in this case, we keep it simple. We want to trade the breakout here of the resistance. We see it's an uptrend, yeah? And we want to trade here the breakout above the resistance and here the support at the trend line. And maybe above the MA. So now you have a lot of risk in this market. We have a risk reward of 2 to 1, means we can make $400. That's almost 50% of our account. All right, so you see this. The market moves up and you like, dirt off your shoulders, you know? I'm the champ of the market, I knew it. So in this case, you already got 20% profit, you got $200, and you don't even look at the chart anymore. You just look at your PL because it's such a high, huge difference to your to the money that you put on your account, your fund. You feel like, oh, if I do this every single day, then I'm gonna be rich tomorrow. Again, emotions, but you don't look at the chart anymore. You're completely hyped, emotional. So what happens is the market corrects. You zoom in into the 5-minute chart and you see this. Suddenly you only have 8% profit, $80 in this case. And what you do is you're so scared suddenly. First of all, first you were hyped and now you're scared to lose it all because the difference is so huge between $200 and $80 compared to your fund, right? But you'd forget that you're actually looking for higher highs and higher lows, and you don't give the market, in this case, the time to create a higher low. You don't give the market the time. You go out, you take the profit, way less than you could have made, and way less than you risk. Yeah, so you worsen your risk reward. And if you consistently do this, you will obviously lose money. What happens is market runs into your take profit because you didn't give the market any time. You were emotional because you had way too much risk in your trades, and you cry. You say, I should have, I could have, I blah, 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 you know? It's all because of the high risk. Simple. Next scenario, and I bet you know the scenario. Again, we see there's the trend line. We want to trade higher highs, higher lows. Now we see here higher lows. There's a higher high. Now the pullback, higher low. We're going to execute above the support zone and want to trade the breakout. Again, 20% risk. Now we just keep it simple. We want to get quickly through this, through these examples. And now the market doesn't move in your favor. It moves against you and it moves down. What do? You see, you already got, what is this, $150 of loss, which is a lot because of instead of $1,000, your hard-earned money, you only got $850 left. And you start to be terrified. You are scared to lose it. And now is the problem. That's the problem. You don't look at the chart anymore and see, hey, we don't got higher lows. No, instead we even got lower lows, means my trading plan says this setup's invalid. If you only had 1% risk here, yeah, and instead of, $150, you would have had like $7, of a loss, you would just say, trading plan saying invalid, okay, I'm gonna close that trade. And you save some money, but you don't, because you are scared to lose the money. What happens is, you adjust your stop loss. Instead of keeping the stop loss where it was, you worsen your risk reward and move the stop loss down in order to give the market more space. And you hope. Your setup says already, hey, this is invalid, but you start to hope because you don't want to accept the loss and lose the money. The market moves down, and again, you adjust your stop loss to the downside. Now you have a risk reward of 1, and you can lose almost twice as much as you were actually risking, which is $400, almost half of your account. And what happens is the market suddenly finds support, and you feel like, look, I was right. Look, it was a good decision to do this. If the market moves up now, guess what happens? Your brain, will save this as a success and says, it is good to adjust the stop loss level. It is good to give the market more space. It is good to worsen my risk reward, and it is good to accept more risk in the market because I will get the reward for it. Yeah? And as soon as this happens, you will do this over and over again, and this will not give you any consistent profit. What happens is you're gonna get stopped out, you burn half of your account, and you blame the market. Do you know these scenarios, guys? I know these scenarios because I made exactly the same mistakes, and this is all just based on too much risk. Too much risk means emotions, and emotions means no rational decisions anymore. That's what you, instead of what your trading plan says, instead of what you see, instead of sticking to it, you just hope. You either hope the market will turn around because you don't want to burn your account, or you're scared to lose your profits and give the market back what you already got. That's it. And it's all just based on too much risk. Too much risk is always a problem for trade management. Always. So what you do is you always, in this, just as an example, in this case, you always lose 400, you win 80, you lose 400, you win 80. Again, hit ratio 50%. You worsen your risk reward. The professional trader does it that way. He loses 200, or she loses 200, wins 400, loses 200, wins 400. That's how you make money. And they keep the risk low. And they cut the losses. Maybe they even don't lose 200, they only lose 150 because they've seen, hey, look, there's a lower low instead of a higher low, so I'm going to close the trade. That's how they worsen their hit ratio, but they cut their loss and have huge wins compared to the losses. So you're kind of stuck in this, you're stuck in a loop in this case. You are not educated, or you don't got the education you need in order to be successful or a good trader. This is causing fear of the unknown, which is causing emotions, fear and greed, which is causing decisions based on emotions, which is leading to losing money, which is, caused by no education. That's it. So the solution is get educated, Get rid of fear and greed. Keep your risk low. As soon as you get educated, you don't risk too much anymore. You don't make any decisions based on emotions. You stick to your plan, and you don't lose money anymore. Get out of this, loop. So now here's some tips to trade without pressure. I can't believe, man, it's already 1 hour and 30 minutes. I planned 20 minutes. Oh gosh. Hi, Ishaku. How you doing, buddy? So here's some tips and trades. Don't see trading as a full-time job, especially not when you begin trading. Because that's what a lot of people want to do. They jump into a business they don't even understand, and they want to do this as a full-time job. The problem is that you will suffer from financial pressure, because you've got to pay your rent, you've got to pay bills, right? And if you want to make money with something that you don't understand, then you will obviously have more pressure, more emotions, and you won't get out of this, loop. You will always do the same mistakes over and over again. Too much risk because you got to pay the bills. You got the pressure. You say, shit, I've got to make exactly $600 right now, today, because tomorrow I've got to pay the rent. You will fall straight. You won't stick to your plans. You will risk rate too much, and you will burn your account. Accept the fact that you're not here to make money. Instead, learn to keep it. There's step one. Earn money, with your job, when you're employed. Learn to keep the money. Means the first stage, in order to be the first level you need to achieve is to be a break-even trader. It means I don't lose money, but I don't make money. And if you achieve, if you got to this level, then you already broke a very strong barrier to success. Most of the traders give up already because they see, I can't make any money here, I'm gonna stay out. Okay? Learn to keep it. You're not here to make money. This will also, reduce the pressure and reduce the FOMO, reduce the fear, reduce the greed. Accept the fact that you need to get educated and experienced before you can make any money. Guys, educate into yourself. Lots of people, when they, for example, see a course for trading or any education, books, whatever, they don't see this as an investment into themselves. The best investment you can make is into yourself, because knowledge is the key to be good at something. And if you're good at something, the money will just be a side effect. The money will come if you're good at something. So education, knowledge is the key here. And don't see money into education as wasted money. Wasted money is money that you invest into the market even though you don't know what you're actually doing. That's wasted money because you would burn it. Yeah? Don't trade to pay bills. The pressure will destroy you and your trading. That's just, I've mentioned that already. That's what I mean. Don't expect to make any money in the market, guys. See trading as a long-term project to secure your future. So you have to have a job in order to stay calm and relaxed. Invest into yourself, invest into education, and slowly learn to trade. And then the money will come. And if the money comes, then you slowly grow your account. Slowly. Marathon. Slowly grow it over the years. And the more money, and that's the great thing of trading, the more money you got, the more you can make, because it's scalable into the infinity. But at one point, you will not have any pressure anymore. For example, if you would have an FTMO account with $100,000, then it's, enough to make 5% a month. And you already have, a decent profit. But of course, if you have a small account, $500, and you want to make $2,000 a month, you won't achieve this. Believe me, you won't. Unless you keep the risk high. What does that mean? I don't need to repeat it, but I will do it. High risk means emotional trading, decision based on, emotions. So bad decisions, completely gambling, and that leads to losing money. So step one, practice with paper money. So you don't drive a car before you pass the test, at least not in Germany. It's first theory, and then you can drive the car. Learn how to use the tools, get practice in execution, and in executing and managing trades. Make experience with different market conditions, volatile market conditions. For example, practice with paper money during the non-farm payrolls, during monetary policy meetings. Practice to follow the trends, practice to trade reversals, whatever you want to trade, practice first. Develop and back test a system. You need to gain trust into your system, into whatever you want to trade with, and get positive results before you start trading a live account, because you need the confidence in order to stay rational and not emotional. Yeah, You want to get rid of the fear and the greed. And that's what you can only do when you backtest your strategies and you know when to get out of a trade and when to stay in. And when to use it, right? When to execute and when to stay out. Trade 2, trade with a small account. This is the tip I can give you. I started with $50 or something. I started with a very low account because you've got to, get a sense for risk and losing money. So the first step is learn to lose with confidence and accept losses. And that's what you can only do if you really take money that you're willing to lose. If you fund your first account, second account, third account, doesn't matter. If you're not profitable, take only money that you expect to lose and say, all right, this is the money that I'm gonna, spend for the experience I make, spend to, recondition my, can I say it that way? Or to train my brain, that losing money is okay. Only take money you want to lose and you expect to lose. Learn to trade without emotions. Yeah, that's the next step. You're gonna learn it if you do it like I just explained, because you will slowly learn losing is okay, and if I only lose what I'm willing to lose, then it's okay for me. I don't want to lose, but it's okay. Learn to cut losses when your setup makes no sense anymore. You can only do this, like I said, if you're not emotional, if you stick to your plan, and you only can stick to your plan if you keep the risk low and you're not emotional. Learn to give profitable trades time to make even more profit. Also, patience. You can only be patient if you don't get greedy. And you only don't get greedy if the profit is not too much. All right? So, here's some tips for less emotions. Yeah, like I said, I already said it, but fund your account with the expectation to lose it. Only take money you're 100% willing to lose. Start trading with the lowest lot size, and that's what I can also really recommend is, no matter how much money you got, whether it's $1,000, $10,000, $100, blah, 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 always start with a 0.01 of a lot size. And when you feel like, hey, I've just lost the money and it's okay for me, then you can increase it. Same thing to profit. If you make the profit and you feel like, well, great trade, but not like I'm freaking the hell out, then increase it until you get to the point where you feel, confident. And if you don't feel confident losing anymore, lower the lot size again until you get confident, and then increase it again and increase it and increase it until you reach 1 or 2% risk. You don't need to start with 1 or 2% risk. Start with the lowest lot size and get used to it. Get used to losing. And as soon as you feel confident, you increase your risk. So, another point, don't look at the profit loss and see everything in percentage. So, when you trade, don't look at MT4 and look at the profit loss. Instead, look at the chart and look whether your setup still makes sense or not. If it doesn't make sense, close the trade. If it makes sense, stay in. Don't look at the PL because it could, again, cause emotions, greed, and fear. And, like I said, always stick to your plan. You will slowly learn to lose with confidence and get used to higher amounts of money. So we almost done, guys. Yeah, we quickly look at fear of missing out. So what is fear of missing out? FOMO in trading is the fear of missing out, and big opportunity in the market, and is a common issue many traders will experience during their career. So here's again, we talk about emotions: greed, fear, excitement, jealousy, impatience, anxiety. How can you fight this? Again, don't see trading as a rush. See it as a marathon. And again, I have another quote here. We're gonna take a look at Wolf of Wall Street again. Where I got it? It's minute 5. Here. Get this in your head. I gotta increase this. The volume. Get this in your head.
Revolutions.
Keep the clients on the Ferris wheel. And it goes. The park is open 24/7, 365. Every decade, every goddamn century. That's it.
The park is open 24/7. All right? Keep that in mind. I mean, it's not completely true because the market also closes, at least the Forex market, the stock market during holidays and weekend. But the market is always open, guys. The first stock market, the first market opened in the 15th century. So the market exists since the Dark Age. And the market will not close tomorrow, and the market will always provide new chances. Always. And as you know, I always compare the market to the ocean. Yeah. And the ocean will always provide new waves that you can surf. But let's say you've missed a wave. Would you chase it? No, the wave is faster than you. You should not chase the wave because you will waste your energy or waste your money. Yeah. Because if you chase the wave, let's say you see a breakout and you don't wait for the retracement, you don't stick to your plan. You know, same thing to the downside. You don't stick to your plan. So we have to accept the fact that there will always be new waves. And the ocean will always provide, like I said, new waves to surf. And we have to patiently wait for the next waves. That's what we got to do. So why should you stay out if you missed a wave? Like I said, if the pullback is done, we don't execute. If there's a missing pullback, we don't execute according to our trading plan and for this presentation. Because when you buy the peak, when you buy high, it is very, very, or the risk is very high that you buy the peak and you're going to lose money because the market is going to retrace. Or vice versa, if you sell the dip, then you're going to lose money because the market is going to move up again to your actual entry that you would have taken. So another question is, can you surf a tsunami? Like I said, you got to practice during different market conditions. A tsunami would be an example for high volatility, non-farm payrolls again. Yeah, like last week. Can you surf it? Are you ready for it? Can you actually, deal with the pressure of high volatility, of either a lot of profit and suddenly a lot of loss and blah, 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 up and down, up and down. Can you do it? Ask yourself, is it worth the stress? If not, simply stay out and practice. So here's some keynotes. Once again, some keynotes, just to repeat it a bit. To lose money does not mean you die. Your fear is unfounded. No education leads to fear of the unknown, which is the reason for losing money. High risk causes emotions that will control your decision making. The more money you risk and the more nervous or hyped you get, practice with paper money and learn everything about the market. Expect to burn your first accounts. You are here to develop the mindset of a trader. Very important. Don't be scared to miss opportunities. The market won't close tomorrow. Learn to be disciplined and stick to your plan. Learn to be patient and wait for good opportunities. Hit ratio alone is not important. And one last advice, for your psychology, for your emotions. If you still feel, fear or greed when you see it tick up or down on the chart, then don't use colors. Instead, use contrasts, black and white on the chart. Because colors always have an impact on our psychology. For example, a lot of insurances, I don't know why, or I know why, but a lot of insurances, they use the color blue because the color blue suggests trust. And red is dead. Or, red means dead. So red is a bad color if the trade runs against you, if you have got a long position. And green could get you hyped because you feel like, look, the market is moving into my favor. And you always experience this roller coaster of emotion. So instead of green and red, take black and white. And it will maybe, help you to stay calm and get less emotional. That's it, guys. Thanks for watching. I hope that was helpful for you. Let me know what you think about it. Oh, Lord, look at Euro NZD. Are you freaking kidding me? Oh, the presentation is done.